To the Sunday, November 2021. It's great to have your company. And my name is Paul B. I'm the founder of Actions to Wealth, and I'm going to do a very quick introduction before we go to Julian. And Julian, I am pleased to have you in today. It's going to be great to have the team go through this market and talk about it. But particularly for yourself, mate, what a weird week. The US dollar actually finally broke out and put a directional move in. Meanwhile, Bitcoin, broke out, backed off, and went absolutely nowhere. ETH about the same. The NASDAQ, which we all thought maybe was pulling back and heading for trouble, put in 2 solid days to finish, as did the S&P, and they look bullish again, which, boy, and the dollar and gold, the dollar's gone up and gold's gone up in a row. Now, that is interesting for mine. I don't know how something valued in US dollar goes up when the US dollar is going up like it is. There's some real strength underpinning that gold move, in my view. And oil, which, of course, has been doing nothing but going up for ages,
now trades like a dog. Yep, there we go.
Everything's back to front, Julian. Everything's wrong this week. Nothing is normal. Make some sense of it for us, will you?
Yeah, I'll do my level best, guys. Hey, look, welcome everybody, wherever you are in the world, to I guess the macro overview. Now, look, I think the key thing for me is to be. How can I put this? I'm getting worried. Everything I see, every piece of real economic data is not very good at the moment compared to expectations. We had a slightly higher inflation number during the week. Yeah, okay, yada, yada, right? However, let's unpick some of this, right? The unemployment cliff that happened in the States as everybody has lost their jobs or lost their unemployment benefits the government was giving them is finally coming home to roost. We saw that in consumer sentiment on Friday. It was rubbish. Now, we're just coming up to Christmas. What are we? We're now 10 days away from Thanksgiving. We're 6 weeks away from Christmas. This is the peak shopping season time, and yet we're seeing consumer sentiment down. What does that tell you about two things? About Q4 earnings for some of those retail companies, and also about the way people are thinking about the economy. This is a worry for me in the US. Now, if it was just the US, I'd be going, yeah, okay, look, let's just park that and we'll get on. But I want to just highlight one quick economic fact that I've been looking into this week. So imports in China, let's take a very simple thing, right? One of the core raw materials, imports of iron ore. You look at the iron ore value, right, of what's been coming in, and look at the actual numbers. You go, oh my God, look, things are amazing. There's like last year it was 10 billion. This year it's 20 billion. Imports are up enormously in China of iron ore. And then you go look at the actual quantity of imports, and they are flat to a year ago, 2 years ago, flat to 2 years ago, and down somewhere in the region of 20%, 25% on this time last year. So the actual number of imports, the physical volume, is down. Okay, the numbers are higher because, of course, the price of iron ore is up a little bit. So here's the challenge that we have, right? And I keep coming back to this. The dollar is up. Why is the dollar up? Because people have got to pay those invoices from when all those commodities were crazy prices 6 months ago. Do you remember that back in May when there were crazy prices for things? Iron ore was trading up at over 200 or something dollars a ton, and now it's at 90. And then we've had the run up in the energy complex with natural gas, and we've had, if you happen to be buying electricity in Europe, I'm sure you're not having a very good year either of the last couple of quarters. So all of those things have come back off again, but the bills and the invoices have come due. This is my version of why the dollar is on its way up. People just need a lot of them. They've got to pay the bills, right? 80% of the world's invoices are in dollars. So when I look at this, I'm not surprised by the dollar breakout higher. We've been talking about this. I think the whole team flagged this either last week. It was 2 weeks ago. I think we flagged it. Gosh, I can't remember these days. Sorry, Auckland's been in lockdown for so long. Every day blends into the other one. So the team flagged this a little while back that the dollar was probably going to move a little higher and the euro was going to move lower. I think as all of these things, I go, yeah, okay, that's playing out. The question in my mind is how long does it carry on for, right? And does it accelerate? So for the time being, you look at the weekly charts and you look at daily charts, you're not really going to try and fight this mini trend for the time being. So let's not try and fight the mini trend, and let's look for opportunities wherever we can. So at the moment, for the time being, the dollar is on a run, and it makes sense to be long of US dollars. I don't think it makes sense to be long of the US dollar against the Aussie. I know that that's performed reasonably well, but I still think the Aussie is in a much better place as a currency compared to something like the euro or compared to something like the British pound. So in my mind, right, we continue to look at this. When you're looking at the dollar index, then that often mimics the euro and mimics the euro, the Swiss franc, and mimics the euro, the Swiss franc, and to some extent the Japanese yen. So unsurprisingly, we've seen that breakout and we've seen that breakdown in the euro. Dollar Swiss is clearly rallying, and dollar yen is also come back a little bit. I think it jumped a big figure on Thursday. So you've got all these things taking place. Right now in the short run, just keep playing that. I think the sell-off we saw in the dollar, the slight pullback on Friday, was probably just end of week profit taking by those people that had the right position on. I'd look to think on Monday, Tuesday, Wednesday, we should probably trade higher again. That makes sense. But I'm not sure how much higher, right? So when we look around at opportunities and things that are going on, if I see the economy starting to struggle, that's a warning sign for me with stocks. You guys, you've listened to me for the last couple of months around this. Looks like an analog to me of 2007, 2008. Guys, go look up what happened to the stock market in that point in time. The GFC didn't just happen in 2 months, right? It took 2.5 to 3 years to spin out. A lot of people lost a lot of money in 2007 shorting that S&P into the end of the year, despite the fact that things were clearly not right. The stock market kept on going, and I feel that we've begun to see that now. Look at some of the speculative stocks, right? Look at the Teslas, right? That's off 20% in the space of a few days. The volatility is starting to pick up. So this is one of those times where, as I continue to do, I have done for the last 2 months, I continue to tell you to remain cautious in the equity markets. I don't understand what's going on. The real economy is telling me one thing, the equity markets are telling me something different. When I have that dichotomy, trade it, take the wins. If you get it, take the wins, right? But just be aware that at some point in time, gravity will work in the same direction, and something's got to happen. Either the economy picks up, or else we're going to see a problem. Okay, so the dollar rally. Traditionally, a dollar rally is not very good for the world. I really think it's related to money. So why don't we park that discussion for the time being and not try and relate it to an economic issue? I think it's just purely a monetary issue. And then finally, we've got, when you start to think about what else is going on, the energy complex is beginning to look like it may be rolling over, but we're a long way from entering a bear market there, a long, long way from entering a bear market. So who knows what's going to happen? The obvious candidate for the week, the obvious play right now is what's going on in the precious metals, and most notably gold. And, we've been talking about gold and gold miners for some time now. Gold miners have been particularly cheap, and it's a safe haven. Guys, if you're thinking about equity and you've done really well in the equity markets, why not think about reallocating something back to the boring assets, right? And gold right now seems to be a boring asset. Okay, yes, it's doing reasonably well, and hopefully that's going to continue, and it might start to form some kind of major rally in here. But I think the money that's moving into gold right now is moving into gold from a defensive point of view, not necessarily thinking that it's a brand new run. Okay, maybe that will be the case. Ainslie will tell us in a few minutes what's going on in that market, but I see the overall asset allocation to gold as being somewhat defensive by people who need to park money somewhere because they don't want to put it in cash because it doesn't pay you any interest. So listen, just bear these things in mind, right? We need to look at that real economy. Just look at what's going on and see what's happening in the real world, right? Yes, of course, some goods demand is much, much higher than it was this time last year, but that's because 2 reasons. Number one, people are ordering more stuff. We see that. You just got to look at those containers coming into the ports in California and the ships that are held up waiting to get into port in China. There's clearly a lot going on, and we know that goods demand in the US is running at something like 30 or 40% above what it normally would be this time of year. But those are deliveries. That money's been spent. Those things have been bought either by corporations rebuilding inventory or by people, for final purchases. And Once all that is done, why then, if goods volumes are so much higher, are we seeing consumer sentiment being so poor? This is where I have these problems. Okay, there's a paradox in here that I can't find an explanation for apart from the obvious one. People lose their unemployment subsidies from the government. 8 million people over the course of the last 7 weeks have lost those subsidies from the government in the States. Is it surprising? Is it surprising then that we're seeing consumer sentiment start to fall away? Is it surprising then people's inflation expectations are nowhere near the actual rate? Is it surprising then that people are starting to get out there and complain about just about everything? Okay, so no, none of those things are surprising to me. People are angry. Angry people don't turn up in the middle of a boom. It just doesn't happen, okay? Angry people turn up when there's something really bad to shout about. And I think it's happening through a lot of jurisdictions around the world. So this is going to be fun the next few months. We've already seen some great trading opportunities in the foreign exchange markets the last couple of weeks. Maybe this is gold's turn now. And for those of you who've been following, Ainslie and I did an amazing piece. Go check it out on YouTube. Paul, maybe we can maybe flick the link out again to people after the week that we've had in gold. The show that Ainslie and I did, I think about 3 or 4 weeks ago, where we talked about the gold market, how prescient that was, guys. Okay, we did that show, and now we're seeing gold starting to perform. All right, this is why these things and these shows are so exciting. We don't just put them on for fun. We begin to see that asset allocation. We want to share it with you guys. We can't give you direct recommendations on these shows, but we can point to what you should be thinking about doing. And let's see where that journey takes us in that asset. And as I say, the stocks, the golds and mining stocks have been cheap as chips for ages. And if you look at it, there's a super long-term trend in gold mining stocks. We just about touched that trend line before we bounced over the course of the last 3 to 4 weeks. So there's some really interesting things going on in that space. As I say, Ainslie will talk more about this in a minute. But for me, the macro picture is going from mixed to slightly negative now. And I do not understand why. Well, I do understand why stocks are going up, because they always go up this time of year. This is a seasonal time for it. But I'm going to amber on my alert signals. I'm concerned. I don't understand this difference in the real economy versus the difference in the financial market. Something's wrong. I worry it's an analog of 2007. That's it for me, Paul.
Cheers, Julian. Interesting stuff. Thank you very much for that. And I will get that link and get it posted.